Hello and welcome back to part 3 of the Ichimoku Cloud series. Part 2 was the Tenkan-sen, part 1 introduction, but this is the Kijun sen we're talking about today. So in the intro we set it up, and we numbered this one number 60, that's going to be important today. We looked at the Tenkan, how that's calculated, and which was the blue line, and today we're going to look at the Kijun sen. So what is the Kijun sen? As I've said, it is the baseline, so it's 60-day highest high and the lowest low of the last 60 periods. Let's turn it on and have a look and see how it looks on the chart. So highlight this today, highest high, lowest low, and that's where the Kijun sen line is today. So what is it? It's the midterm support and resistance line. So when you're looking at price, it is the midterm support and resistance. So when you're in a bullish trend, you can see back here, that's where price kind of wants to go. It's the mean reversion target of price. So if you're in a long position, say from down here somewhere, it's a really good way of combining positions if price is really sort of overextended, and you can see that by adding the Tenkan. Let's add the Tenkan so we can actually see. So when price pushes away, it wants to come back. So when these two lines are split apart, you can expect some sort of mean reversion. You want them to be nice and smooth. You can see, yeah, really smooth together, really close together. Start to push too far apart, it's called a C clump, bangs down, back down to the mean reversion, smashes back out, starts to move away, again mean reversion target. When price starts to push through Kijun, warning sign, that's when you can start thinking it could be a change in trend, and these two lines work together to give you signal. You can just use these two lines alone, you don't have to use the rest of the stuff I'm going to go to in detail. So let's just recap. It's 60-day period divided by 2, midterm support and resistance. It is the mean reversion target, and I always know where the Kijun sen is on the daily chart. I know I don't have to have it on the chart. I know it's 25 grand, and that tallies with other times, time frames on Ichimoku Cloud. Sometimes I'll switch to 12 hour. I'm not going to go into that today. We'll go into that at the end of the chart. Great for compounded positions, and it can signal a change in trend. So the two lines working together. Let's just give you an example of a crossover, and we'll refer back to this later. So we have a crossover. Let's get this right. So this is the right day. It is this next day, 17th of October. Let's put a vertical line. We'll refer back to this in later modules, but you can see what happens. Bullish crossover. That's when Tenkan pushes up through Kijun. Price move up. Floated through equilibrium a little bit, smashed into Kijun, combined positions. Your stop loss would probably be, or my stop loss if I was running this, probably under this pivot point here. Move it up. Again, another good opportunity for combined positions. And you can see it's the lines were far apart. It wants to come back to the mean reversion. So where would your stop loss be here? Probably your stop loss would be under here. So you probably may not have been stopped out of this position. However, because of the force through the Kijun, warning signs, and there's probably another signal which we'll go into in the next module, the purple line, which I'll explain. There's probably another signal before this, but you can see this is warning signs starting to push through Kijun. You'd start to, at this point, think April 20th, I need to start reducing my position if I was long from 11.5 grand, now at 53. So you can see it's really good. And then we had the bearish T-code cross here, May the 4th. We all know what happened after that, especially on May 19th, where massive sell-off. But we had a signal or before, warning if you're using the system of what could happen. And we hit the summer lull in 2021. Again, really big distance between, but then it started pulling down. This is where it's happy. It's a happy place when the two lines are together. That's its happy medium. But then we had the another bullish cross at the end of the summer. Obviously, we had this run up. You're going to miss the low. This is what I said on an introduction. You're going to miss start of the move. And we can even calculate here. Let's have a look. So if you had a crosshair and everything else was great, you're going to start. So you start pushing through Tenkan, and then your stop loss would be. That's a difficult one here. You got a pivot point here. Your stop loss would probably be here. You'd probably stop that in this candle. So you had a 20% move. You're not going to get the full 44%. So you're not going to get the meat of the move. However, what did you get back here? Enter. We said exit would be probably around here, 284%. Where was the bottom? Where do you enter? You catch knives all around this point. So you may have entered down here. So yeah, in the big moves, in the big bull runs, you're going to get the meat of the move, which is the most important thing. So I think I've covered everything. I've covered more than I was going to when you have the TK cross, bullish or bearish, which is a trade signal on its own. 60-day time frame for crypto. And that's how the two lines work together. So in the next one, we're talking about the cloud in part 4 and how those two lines work together to form the cloud. So that's part 3 done. I look forward to seeing you in part 4. Thank you.